Hi everyone, this is Brian from financialtradingjournal.com, and this is the first video of my new series, How I Trade Binary Options. This one is using 60-second expiries on TradeRush. Little background info before we start. You need two things for this. You need a time chart and a tick chart. A time chart is simply just time. Each candle represents the time that you're on. Like, for example, I'm using 1 minute chart, so each bar is 1 minute, versus a tick chart is order flow, so each candle represents a certain number of trades. And what I'll be using is 133 tick chart, which means each bar represents 133 trades. Tools you'll be using: you need a broker that provides tick charts. Not many do. I know of two ways. I use Thinkorswim. Their platform provides the tick charts, and you can use MT4 with a custom indicator that displays tick charts. It's up to you. I'm going to be using Thinkorswim for this video, and you can sign up for a paper trade account. It's free, demo trade, whatever. I'm in Canada. I use their Canadian division. If you're in the States or international, then you probably will be going through their US division. So I'll just show you the platform real quick. This is what it looks like. This is zoomed in on what I need. So basically the top part is the time chart, 1 minute bars. Each bar represents a minute. And the bottom chart is the 133 tick chart, and each bar represents 133 trades. And as you'll notice, the 133 tick chart is not flowing with time like the top chart is. So each bar on the bottom could last between a minute up to an hour, or up to however long it takes for 133 trades to show up. So that's it for how the charts work. Back to the actual strategy. So here's the strategy, guys. I trend trade 60-second expiries, and what I'm looking for are consecutive same color 1 minute candles, and while these candles are forming the trend, I look for the 133 tick chart to form the same color candles to reinforce the trend, because this shows that the orders coming in are in the same direction of the trend that's forming. So they should back each other up. And this is a strategy, not a system, because you need judgment. Judgment is like 20%. You have to be able to determine the trend, and it's not foolproof. It's not do this and you do that. It's what you see, and then if you can do it. So here's the typical scenario is I'm generally looking for, if I'm using this strategy, is 2 to 3 consecutive same color candles on the 1 minute bar, 1 minute chart, and the 133 tick chart showing the same color candle. The 2 to 3 is up to you. If you're aggressive, you can just trade the first one, but you need like 2 to 3 to determine the trend, and then if it's actually forming a trend, you know, it's up to you. You can play around with that. So based on your criteria, I'm using 2 to 3. So on the third or fourth 1 minute candle, if it's forming the same color in the trend that I think is forming, and the 133 chart tick candle reinforces this movement, then I place my test trade here. If you've read my blog, I've stated multiple times, the test trade is win or lose. Win or lose determines if you have a trend or not. So two things can happen. If you win, it could be fluke, it could be luck, it could be whatever you're doing. So you trade another one because you win the first one, so you trade a second one to see if it's an actual trend or not. Okay, so the next one, if you win that, great, then that kind of confirms that there is a trend. You keep going until you lose. First loss, you watch. If it's a pullback and it continues the trend, you keep going. But if it's reversal or it gets choppy, then that means the trend is done and you're done. You stop, you walk away. But if you lose the first one, then you watch. If it's a pullback, or if it's choppy, or if the trend is continuing, then you trade a second trade. If you win, then you keep going, you repeat as above. But if you lose, then maybe it's not your day. You have bad luck. There's no trend. It's choppy. So you stay out and you walk away. don't bother. And as the trend progresses, you usually see more 133 tick candles forming to reinforce the move. A precaution again, just to make sure that if you lose twice on consecutive bars, so let's say the first bar you lose and the second bar you lose, then that's it. You should stop. You shouldn't continue trading. That should be the end. It's a choppy market. It's not your day. You just walk away. You come back for another trend, or you use a different strategy. Okay, so some final notes before I get to the examples is that trends typically last 5 to 10 minutes long. So that means you're expecting to see 5 to 10 1-minute bars of the same color. Usually you see like 5 to 7. If you're lucky, or if it's a good day, you see 10. If it's a data release day like NFP or GDP or some bankers talking or the ECB announcement, some type of big news, then you might see 15, 20, 30-minute moves. Those are rare. Those come like once a month, but usually you see 5 to 10. So you'll see these candles. Then thing is, it's not going to reverse right away. It's not going to go green for 10 candles and then go red for another 10 candles and then go green again. It's going to go green for 10 candles, and it's going to be choppy. It's going to be red, green, red, green, red, green. It's not going to go consecutively. So once you're done trading one trend, walk away. Like, you can set a limit. Set like after 5 trades, you're done. After it trends 10 candles, you're done. You know, just walk away. Because if you continue trading, and let's say you're under the impression that it's an uptrend, and you still think it's going to continue on forever, and it starts getting choppy, then you start losing trades you don't have to be losing, because you shouldn't even be trading at that first place. So once you're done the trend, walk away. That's it. Yeah. So I'm going to start the examples. Think or Swim right now their 1 minute data doesn't go back that far. They go back like a day or two. So I'll be using pictures from my my trade journal, which if you've been to my blog, you've probably seen them all, but this is just me commentating on what I saw and all that stuff. So this is December 20th, 2011. For all of my charts, the magenta or purple areas are the trades that I did not take. I'm just simply illustrating the correlation between 1 minute charts and 133 tick charts. And in all the charts, the white sections or regions that I outline are the actual areas that I trade in. So you'll see this, the magenta area, this red trend here correlates to these red 133 tick candles, and you'll see that this was choppy beforehand. It was in a tight consolidation channel. You saw it here on the tick charts. Then it goes downward momentum, it breaks the channel, and it starts going down. That's the signal to start trading. You can wait. You can use a strategy, or you can use price action. If you use the strategy 1, 2, 3, which didn't really occur anywhere else here. See, if you use 1, 2, 3 on this, you would lose that one. Then you'd win. But it's kind of hard because it's consolidating, so you don't do it. But then this is 1, 2, 3. Then for the next, out of the next 5 candles, 4 are red. So that's a trend that you can enter, and this is supporting the move. I didn't trade that. Probably didn't wake up yet. As you'll notice for all the charts, the first magenta region is usually the region where I'm still asleep. So this is the white region, white outline region. Probably noticed this was choppy up to there, then it starts going downward momentum, and you see this downward momentum forming on the 133 tick chart, and you see the 1 minute chart forming. So you go probably 1, 2, 3. This one I'm watching it. You start entering, and then you trade. You know, this one is a big one. I probably, on the big bars, I tend to enter if I can catch it. 1, 2, at least 2 to 3 trades on the big bars. Then on the smaller bars, you know, I might trade 1 or 2 only. And then, because it depends on your strategy and on your risk level. If you want to risk multiple trades per candles, then it's up to you. Because you have to remember that these options expire 60 seconds from the point of entry. They don't expire at the minute. So you can enter at 0 seconds, it's going to expire the next minute at the 0 seconds. If you enter 15 seconds past a minute, it's going to expire 15 seconds past the next minute, and so on and so forth. So you can trade intra-minute. If it's in the middle of a big move and you can see that it's starting to move big based on the 133 tick, it's just downward momentum. You can see this coming, then you can just trade one at the top, one in the middle, one near the bottom, and still you're gonna win. And you better hope that the next one closes below. So if you enter the bottom, the next one is green, then you're screwed. But depending on your timing, you could enter on this one, and the next one you still be fine. So it depends. This is December 22nd. This represents the area that I traded. I probably traded for an hour or two. This is from 9:45 to 12:20ish, so yeah, about an hour and a half. I didn't specify specifically what areas I focused on, but you can probably tell. Like here, for example, you see dojis and pin bars, noting that there are sellers here, so price doesn't want to break upward. So you see downward momentum here, and you're trading, I'm guessing, these bars here. 1, 2, 3, enter, and you win, say 4 or 5. And once you're done the trend, you stop. Like you could stop right here. It pulls back. You might continue, and then you stop, because then here you don't really know what's happening. Either it stays choppy or it's going up and down, up and down, up and down. You stop. So here's another good trend. 1, 2, 3. That's forming with these two bars here. So 1, 2, 3. You can probably, if you're aggressive and you're watching it, you can trade the 4th and 5th candle. But then if you keep trading the 6th candle, you're gonna lose that one, and that's your first loss. Then you sit back and watch. You see downward momentum here, so you go 1, 2, 3. You watch, or you enter this one, you lose. You watch again, it goes down. Maybe you trade again. It's hard, because you need to be able to spot the trends and then you trade them properly. Then it goes choppy for a bit. This is illustrated with the tick charts here. See, there's no movement. No new trades are pushing upward momentum on the tick chart. So here, then finally after 5 candles of 133 ticks, so that's 133 times 5, so that's like I don't know, 650 something trades. Big movement on this 6th candle. That means there is upward momentum now. It's breaking out, illustrated by this big candle here. I start watching. 1, 2, 3. Okay, enter. First one, lose. Or I don't enter. Watch it. Outside the Bollinger, then it starts shooting up. I enter multiple times here. These are big candles, so I'm entering a lot. I'm entering 2, 3, 4, maybe even 5 times. Then it goes outside. You have to watch price action. You have these wicks here, and you have consolidation, and maybe it could go back down, or it could pull back, or go up, back up. This is where you're watching price action. But that's it. This is one trend, because it doesn't last forever, right? So then as soon as it gets choppy, you're done. Sit back and watch, and then maybe if you want to, you're aggressive, you can trade some trades here, 1 or 2. It's up to you. This is December 27th, part 1. You'll notice there's 3 to 5 red candles on the tick chart, but on the 1 minute chart, it's not consecutive. It's not continuous red movement. It gets choppy. You see this flat line here, flat line there. I probably woke up somewhere around here, and then this is the downward momentum that I saw coming. So because this is flat, then it's flat again, then this is downward momentum. Boom, it goes down. Formed, supported by a big red tick chart. Enter a few trades there, or maybe multiple trades. I don't know. Probably. I usually get in 5 to 7 trades per trend for a 5-bar trend. If it's 10 bars, then sometimes I get skittish and I just stop, because you don't know. You have that gut feeling that Maybe it's only 5 bars, maybe it's 10 bars, you don't know, but 5 is like my magic number that I try to get 5 to 7 trades in. First one may win or lose, and the last one may win or lose. So you're always enclosed by your first test trade and the last trade, which is either a loss or a win depending on how you gauge the price action. And the trend to come afterwards is upward correction. This is rare, you don't see it all the time, but that's signified there. This is part 2. This is price action, reversal with the doji on the tick chart, so that's upward momentum there. Then it gets choppy with 2 dojis, and then upward momentum again. I'm trading upward momentum. This is, and depending on how you trade, I might have seen this, then I trade call all the way through here, and if I'm aggressive, I might have, or if you're aggressive, you might have put, say, 2 to 3 per, because you see this big upward movement. It could continue a long way. So you go multiple times, but then you're gonna get caught on this candle, because you call 3 times, you're gonna lose 3 on that one red candle. Then it continues, and this is reversal. See, it goes 3 red, and it's got choppy. It's not continuous. So you got to be careful. Again, missed the first part, eating breakfast. There's a few scattered green candles, and some non-movement candles, but for the most part, it's continuous red. So like from here to there, you're good. You're good for like 1, 2, 3, 10 candles. Then it goes no movement. Then you go another 4 candles. You know, you could trade that, time it right, and you can win every single trade. I didn't trade that. I probably started logging in here near the end of the red trend. I figured, okay, maybe reversal. It gets choppy for a bit. Fine, whatever. Then here you go. Start reversing. 1, 2, 3. Still watching it. Boom. I enter. This is a big uptrend with some downtrends. But I trade whenever I can. Go 1, 2, 3. Watch. Enter. You just call, and then see here. It's gonna pull back. This is, and if you read trend analysis, any good trend needs a good pullback for a good run, because you can't go up forever. You go up, then you go down, then you go up some more, and then you go down, you go up some more, like a lightning bolt. That's what that is. Yep. See, same tick chart remains the same. This is an uptrend, choppy on the way up. See, that's all the downs. But I'm basically trading all the continuation trend. It pulls back, enter some more. Pull back again, enter some more. Look at this. This is a nice trend right here. This one is, what? 10 to 15 candles. I probably got in at least 8 trades there. Yep, purple area, didn't trade those. This is where I traded. This is a rare occurrence. So you get this green trend here with a lot of movement on the tick chart, and then followed by a consecutive red candle or red downtrend. That's rare. Don't expect that all the time. But if you watch it and you see it forming, because you see this go up quick, then go down quick, then you just trade it. Trade wherever you see. Otherwise, if you walk away, that's fine too. Who cares? I think one of these, see here, this one. This is December 29th, part 2. As seen on my journal, on my blog. I traded the choppy areas, big movements, watching the tick chart. Whenever it forms a big movement, I'm probably entering near there, or watching price action. And then this is the downtrend that's forming. 1, 2, 3. Looked there. See, this is 1, 2. You're looking for the third one. Didn't happen. 1, 2, 3. Next one is whatever. Then it goes down. It goes red, green, red, green. But you're seeing big red, small green. Small green is tiny pullback. And then boom, it goes down. I probably stopped trading once I hit I don't know, 5, 7 trades. I'm done. I don't bother going any longer. But as soon as I stop, it goes red consecutively. So if you can catch it, or see, because when I'm done, I close the chart. I ignore it. It's gone. I don't bother. If you have self-control, then you can keep the chart open and keep trading, or just look away and look back and control yourself, and that's fine. This is the last session that I traded. This is at night, Asian session. First trade was the end of an uptrend. You could tell by the tick chart, 2 greens, 1 last green. So you can tell by the tick chart, three candles means the run is almost over. So you're trading, then you go, my last one before it ends. Then it starts going red, reversal, boom, reverses down, go 1, 2, 3. This is another rare occurrence. I traded this big one twice, once at the top, once in the middle, and then I traded pullbacks. Pullback green, pullback, pullback, pullback. This is, the last one is price action. 2 pin bars with huge wicks on the top, means there's sellers. This one goes up, and it closes green, but next one is red, and it gets choppy. That's it. These are the trades that I've made on TradeRush the past week or so. I hope you've enjoyed this video. Below in the description are links to TradeRush, links to my blog, and my Twitter feed. I just started using Twitter. I'm not sure if I'll be using it that often, but you can use it when I'm online and I'm trading. Then I'm going to be tweeting. That's it. Hope you enjoyed this video, and good luck trading.